Hey everyone, welcome back to my channel. Many of you may already know this, but I'm a big fan of funded trader programs, and they have led me to primarily trade futures when I trade intraday. I do trade options as well, but nowadays I mostly use them for swing trade ideas or long-term selling. I believe funded future programs helped propel my success in trading by providing me with more cash flow and minimal risk. They also helped me get over the emotions that were keeping me out of trades. However, I do feel I'm outgrowing my initial funded accounts. I want to talk about solutions for this. I have a friend that gave me this idea, and I'm very excited to he trades full-time and makes over 60K a month using this strategy. Before we get started, I'll leave several discount codes for trading services I use in the description, including TradeEdX, Voland, and Elite Trader Fund. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. Also, be sure to hit the notification bell to get notified whenever I post a new video. So, let's get right into this. What I want to talk about is how when I first started funded futures trading, I actually had started with Top Step, which I no longer use, but ended up moving on to Elite Trader Fund because I liked their evals better and I wanted to get bigger accounts, which is what I did. So I started with, when I initially jumped over, I started with a 10K account and then progressed from there, adding more accounts. And I actually would make the mistake of just trading with one of those accounts. And what happens is when you pick, let's say you pick a 50K eval, and you can trade up to 80 micros, which is actually quite a bit. I feel like that's too much size for an account this size, especially when you're doing the evaluation. I don't think that's very wise because you only get 2K drawdown. So if you were to use that much size and you get one trade wrong, you actually blow it out. So just because they give you that much size doesn't mean you should be using that much size, but that's a whole different point that I've covered in a different video. However, you do end up, as you build that account up, what happens is when you get funded, so when you pass your eval, you go into your elite account status and some of the rules change. So first of all, you have these payout rules depending on your funded amount. So when you're talking about a 50K account, your first payout is limited up to 1,500 depending on how much profit you have in there. Second payout 1,750, and you can, and it talks about the time frame you can do these. It's a little bit less than a month per payout in between. Third payout is a bit more for the limit, and then your fourth payouts, you don't technically have a maximum. However, that's not entirely true. There is a rule, and consider it like a no YOLO rule is the best way I would describe this, because what was happening when people get funded, and I believe all funded trader programs, prop firms experience this, and this is just a way to protect themselves. There's a couple nuances they use to protect themselves. One, once you get over your base drawdown limits, they end up at the base of your account. So as you grow that account, so let's take this 50K account, right? And you get to your realized P&L and you start getting up to 55K and so on and so forth. Once you make 2,100 in realized profits, so your drawdown plus 100, the drawdown stops trailing, which is great. So you can only blow your account if you give back all your profits. So it's really not in your best interest to completely just deplete your account whenever you're getting your payouts, because you don't give yourself any cushion. You put yourself at risk of blowing your account. But also, it's not in your best interest to sit there and YOLO the account on top of that because of this 40% rule. And so basically what this means is that if you make over 40% of your account balance in one day, so you take some massive YOLO trades, and so, you know, let's say your account balance is 60,000, you make over 40% of that in one day, it actually does limit your payouts until your account balance grows beyond that. So it's not like you're permanently locked out, but it's just something to be aware of. So as you're growing your account and as you're adding your position size, you want to do it gradually, right? So as in a 50K account, as you're adding your micros, so say you're trading 10 micros at first, and then you go to 15 and 20, so on and so forth. As the account size grows, you're incentivized to keep that more gradual, right, and not deplete your account as you withdraw. Now the thing is, you do end up capping out, and you can't progress past that point. You're still limited to your 80 micros. Even if you were to grow this account to 400,000, 500,000, and you want to start moving past 8 minis, you're limited in doing so. But what you can actually do, and this is what I'm starting to do now, and really take advantage of this, and I should say this only works, as far as I know, the way I'm about to show you within Tradovate. There are ways you can do this with third-party tools, such as there's one here called Trade Copier. It's not a free tool, but it does work. I haven't actually use this myself because I'm still doing everything within Tradovate and Elite Trader Fund, but this would allow you to spread it out among other prop firms and other brokers. But Tradovate actually comes with this feature built in where when you have multiple accounts, you can use this and Elite Trader Fund does allow for this. They do support this as part of your package when you have your accounts, and you can do this with, you can mix and match your eval and your elite accounts as well, which is great. But you can see here you create this group, and then you add in your accounts to a particular group, and then you add your position size. So let's say you have your 25k account where you want to do one mini. You have your 50k account, maybe you still want to keep it to one mini, maybe two minis. Then you end up adding, you go through and you add a 100k account, 300k account, whatever it might be, right? So as you start adding these bigger accounts, you can go through and add larger position sizes. So you can add, say I want to trade 5 minis or 10 minis or whatever it might be. And what happens is when you have this group selected as your account, and I apologize for not showing this on my accounts. The reason being is because last time I did this, I exposed my account number and some other important information. It was my own fault, but it's just not worth the risk to me to do so. But anyway, easy enough to see. You can actually Google copy trades Tradovate. So it shows you how to do this. And Elite Trader Fund might have some documentation as well. But the beauty of it is, so if you were to set this here, so 3 of them in one account, one in another, and you were to do 5 trades, it spreads these out between your accounts. And therefore, what that means is you can add accounts, continue trading your old ones to continue growing those. They'll take the same exact trades that you take in your larger accounts, but you can also expand upon your accounts and you can keep adding new accounts. So I had referenced my friend who's currently doing this. He currently has over 12 funded accounts, and many of them are above 250k, 300k, and he's growing them rapidly, and he's spreading those trades out using the Tradovate group trade feature. And he did actually start moving, kind of spreading out his eggs so they're not all in one basket. I don't know the other prop firm he's currently using, but I know he is using Trade Copier to help spread those out. So he's using group trade feature in Tradovate and then started spreading out from there. But essentially what that means is when you start getting to your payout rules, because you have these funded accounts that were spread out and they're different sizes and balances are growing differently, you prevent yourself from hitting the YOLO trade rule by using too much size in just one account. 2, you keep growing any old accounts you have. So you can start with a small account. You can start with a 10k account, build that up when you feel comfortable, add in another 25k account. You're still trading your funded 10k account while you're passing the eval in your 25k account. Then you can do the same with a 50 in another month or so once you pass it and you've grown it a bit. My plan is every time I get to the point where I've reached my 4th payout on an account, so essentially right about 4 months, I'm going to add a new account, one size larger than the prior account I had. And I'm going to do that up until a certain point. I mean, we'll see. And then that will allow you to have constant payouts going. And the beauty of this as well is when you're a funded trader, you get a 1099 NEC. So this is for people that live in the US. I don't know how this works outside of the US. That's something you have to investigate your own. But you get a 1099 NEC. So when you save all your receipts for your evals, right, and you get discounts. I have coupon code Fatty Trades 2023, which gives you discounts, which I'll leave in the description on all of these accounts. But what that means is when you can write off all your expenses once you get your first funded payout. So even if you get paid out once on your 10k account, at the end of the year you get a 1099 NEC. All the expenses you had that you bought new equipment for trading, your internet, whatever it might be, I write off all that stuff at the end of the year because of my NEC. And so I also have my data fees, right? So when you get an elite account, you actually do end up paying $80 a month, and that covers all your market data. It covers your TradingView add-on. It covers your the group trading functionality, various add-ons that Tradovate has. And yeah, it might seem a little expensive, but one, it's $80 a month, so you're making much more than that in your funded account. But 2, you write it off at the end of the year, so it helps reduce the amount of taxes that you pay at the end of the year, which is always good, and you can get creative with other stuff that you add to that that does apply to trading. I'm not recommending anything illegal here, but my goal is hopefully by the end of 2023, maybe it wouldn't be 2023, so maybe 2024, 2025, I'll have roughly 10 of these accounts that I'm group trading in Tradovate and getting different payout sizes from different accounts. And at that point, I'll be able to just retire and continue doing this full time. And I won't have that emotion, because that's what I started doing initially. I was like, you know what? Maybe I'll just leave my funded account on the table and just do a personal account and just grow that one account. But then just knowing myself and how my emotion works, that I knew it was going to impact me differently. For some reason, it feels different. Regardless, it's real money either way, but it's different when it's real money. You've been paid out already. That's sitting in your account. It does actually add some additional emotion, especially once you start getting to larger size. So I'd rather spread that size out, multiple accounts, using prop firm money that is not my own money to reduce that emotion, write off all those expenses at the end of the year, and go from there. And then whenever Elite Trader Fund does a promotion, they usually do one about every 3 months. I may even add 2 accounts at that point, because the evals are dirt cheap. Regardless, once you go Elite, that eval price doesn't apply anymore. But still, being able to get a 300K account with like 60% off at that point, there's no reason not to add that on and pass that evaluation for that much cheaper price and do it with the Tradovate group trade feature. So anyway, that's just my plan going forward, to continue expanding, to continue growing using prop firms, getting the most out of those prop firms, getting the most out of the rules and limitations they have, and sort of getting around that stuff, because the limits on trading 1 account versus the limits on trading 5 accounts would be different depending on how rapidly those accounts are growing. And then of course writing it all off at the end of the year and taking advantage of the 1099 NEC. So maybe this gave you some ideas. I just wanted to share it. It's something I'm very excited about. Plan on doing the same thing that I've seen others do to great success, and hopefully I achieve that same success and I can start doing this full time and putting even more out there for everyone. So I appreciate you watching. If you have any questions, just let me know.